All right, let's go through some of the most important types of candles, in my opinion. It's important to know that there are hundreds of different candle types, and some people trade them like they're their own pattern. I don't do that, but I do use specific ones to kind of bias my trades a little bit, kind of add confirmation is usually what I'm using candles for. And so the first one that I want to start off with, and it's probably it's my favorite kind. They're called hammers. Um, and so I will refer to them either as a hammer or an inverted hammer. And if we're looking on the right side here, this figure would be a regular hammer, and the one upside down would be an inverted hammer. Um, know that these are, sometimes referred to. They're pretty similar to shooting stars. And the only reason I say that is that it's good to be familiar with some of the other names for these candles, in case you see other people posting them or sharing ideas. You kind of know what they're talking about. Um, and the best way to identify them is surely, based on their long one-sided wick. So we can see this candle at the bottom has a long wick on the top and a small wick on the bottom, and the body is, very close to the one side. And so, if you were to turn this upside down, it looks very much so like a hammer. One important thing to mention is that this one on the bottom here that's shown is a red candle, and so this is technically a bearishly closing candle because the closing price is lower than the opening price. But that does not change. This is an inverted candle, whether it is a green body or a red body, and the same is true for a normal handle or a normal hammer. It does not color, or it does not matter what color the body is. It's the shape of the hammer that makes its importance. And the reason that the hammer is my absolute favorite is because they tell a very strong story about buying and selling pressure. And so if we look at this candle on the bottom here, it's showing that the opening price was here. We can think about what was happening to this price. So imagine this candle just opened here. It opens, the price gets pushed, all the way up here. And before that candle closes, that price is pushed all the way back down here before closing very close to its bottom price. And so this is, think about what that means, that in the time that this got pushed all the way up, a bunch of sellers jumped in and pushed it right back down just as quickly. And so this, you need to be able to kind of walk yourself through what's happening when these candles are being printed. It's very important to know that this shows very much so that sellers are in control, or conversely, it kind of shows, if you want to think about it a different way, it shows that there's at least a lot more sellers stepping in at whatever price this is. Price ran up here, and a lot of people were willing to start selling this off enough so that it made this long wick on the one side. And so it's very important to always look at these longer wicks and think of them as pressure on whatever side they were. And if we turn this candle upside down and make it a regular hammer, you can tell the same story, which is that, price came down here and a bunch of people stepped in and just bought it right back up. And so that's why I love the hammers. It's really as clear as that. Price came to a point and quickly reversed out of it. Just shows a lot of pressure in the direction of in the direction opposite of the long wick. And so the reason that I use, or one of the ways that I use these and why I like them so much, is that they're great confirmation candles when used in conjunction with a support resistance level. And we will get into kind of what I mean for that. But let's imagine that, we'll get into some real examples, but imagine there was a resistance line, somewhere through here. If this candle got pushed up and then before it closed got pushed really far under, think about how much confirmation that's giving for that resistance level that you are watching. And so these are candles that I love to see when I'm waiting on a trade for what I call, say, wait for a candle confirmation or something like that. It's very much so waiting for something like this, where you wait for, a 15-minute, a 1 hour, 4 hour candle close, whatever it might be. And when it prints something like this, if it's in the direction of the trade you're looking for, it's one more thing that adds to your case, that adds to your ideas. Depending on the strategy that I'm using, I absolutely put all of these candles that I'm showing in my trade plan. But that's pretty much it for hammers. They are, what I consider probably the most straightforward one. They are the simplest. They are my favorite. With that, let's go to this next. This is the same thing about hammers. But the top side of the slide here is showing the regular hammers. So we have both the bodies at the top, and the bottom is showing the inverted hammers where the bodies are at the bottom. And so I said that the color of the body did not matter for, whether it changes the story or not. It does not change the story. Both of these candles on the top here show a ton of buying pressure, where this one opened, price came all the way down, came all the way back up, and ended up closing back here. This one, opposite, opened here, came all the way down here, got bought back up and closed here. And so both of these show a lot of buying pressure, but if you have the color of the candle in the direction of that pressure, and so buying pressure and a bullish candle, that is more impactful than if the closing price is lower than opening. And the exact opposite is true for inverted hammer. So an inverted hammer that is red is a slightly stronger case than an inverted hammer that is green. But know that they are both still very valuable. They're very strong candles. All right, moving into the next type, which is called an engulfing candle. I refer to them either as bullish engulfing candles or bearish engulfing candles. I don't know actually any other names for these, so I'm not sure that you'll, those are really the most common ones. I'm not sure that it'll get mistaken in any other, whether you're reading Twitter or anything else online. Engulfing is really the common term for this one. So what I have is an example down here. This particular green candle here is the bullish engulfing. And so what makes it engulfing is that at least two previous candles can fit entirely inside of it. So if we take this red candle and this red candle and move it over, this green candle is still larger. So it engulfs the previous two or more. Some people will say that if it's one candle, that's sufficient for engulfing. I don't use that. It has to fit two or more candles. And if this were the opposite, it's the same thing for a bearish engulfing candle. If you have a red candle that is larger than the two previous green candles, that is a bearish engulfing. And these tell a good story about buying and selling momentum as well. It's actually not so similar from the hammer, where the hammer we were just talking about, price visits a point and gets bought up quick. The engulfing are very much so that once they open, they pretty much just move hard in their one direction and then kind of just don't move at all. They usually have very small wicks on both sides, and it's just a candle that's pretty much entirely a body. And so it's a similar story to the hammer, just with a slightly different shape. The reason that I actually don't like the engulfings as much as the hammers is because I don't really use engulfings as a way to enter a trade. It kind of just gives me confirmation of a trend, that I'm watching. The reason I don't enter off of them is because usually an engulfing candle makes the price move a decent bit, and I'll enter somewhere on like a pullback kind of a thing. Always use the engulfing candle with other trading ideas, whether it's an engulfing candle that shows up right at a support level or a resistance level, whether you're marking a trend, a market structure change, or some other idea. Absolutely never trade solely just on, oh, here's an engulfing candle, let me enter that direction. Definitely don't do that. It's made to help build the case. It's certainly not strong enough to be an entity of its own. And that's pretty much what I have here, is that most people will not use these as a way to enter a trade based on a close. Like when you're waiting for a candle confirmation, if it's a really aggressive entry and it's a really strong trend, there's times where it's okay to basically close and just enter a trade and just let it ride out. Obviously, in this image, that would have worked fine. You would have taken very small down and then up. A couple other strategies that if you have an engulfing candle, often people will actually enter halfway through that engulfing. And so the price will come down halfway, and it actually looks like this is actually a pretty good example of that. But it's not a candle that basically as soon as it closes, you don't usually enter. It's just to give you a confirmation of the ideas that you're building for your trade. All right, and this is actually the last kind that I'm wanting to show. So I only really have three important candles that I think matter the most. And so this one is called a doji. There are so many names and types of doji candles. And it's because people will change the name based on where they are in the structure of the trend. They'll change the name based on what color they are, where this doji is positioned, whether it's higher or lower or centered. Just know the ones that I'm talking about are really the centered ones that look pretty much just like this. They look just like a plus sign or like a crosshair sort of thing. And the reason I really like these is because they tell a story about indecision. And so if we think through it, a candle opens, price runs up, gets pushed all the way back down, price runs down here, gets pushed all the way back up, and it closes almost identical to where its opening price was. And same thing for whether it's, a bullish or a bearish closing candle. It just shows that there's equal buying and selling pressure. And saying it like that might not mean as much. I often think about it as like these candles are really like the bulls and bears just fighting. A bunch of people are buying up and thinking that this is a good price for a candle. A bunch of people are selling it thinking that they're taking their profits and the market's going the other way. And so it just shows a ton of indecision. And this is really useful for identifying uncertain trading conditions. I mean, if you're looking for a market reversal at some point, this is a good idea that it might be happening or if there's some trend change coming. But this doesn't give you any kind of confirmation that it's there. This is just kind of like a, hey, maybe this is right around the corner. And kind of building off that idea, if there, imagine there is some kind of market structure and there's a doji, let's say at the top of it, those are pretty commonly followed by an engulfing candle of some kind, that an engulfing candle that goes the other way. And I'm sure that we'll find examples in a second when we go and look at the charts. But that's pretty much where the doji comes in handy is if it's followed by an engulfing candle. It's important to know that those kinds that I'm talking about, like a market, like a market reversal or a trend change, that style doji you're often going to hear called a morning star or a evening star. And the only reason for that is that a morning star is basically, imagine a trend coming down and you have this wick to the bottom and then there's the doji, and people will call it a morning star because it's the bottom of the trend and it's rising. It's the morning rising. And the evening star is the opposite. It's a doji that tends to appear at the top side of an uptrend. I will always just call them a doji because it's just what I'm referring to. I don't need all these other names to know that it's where it is in the trend. I can look at a chart and figure out where that is. Doji is just, whenever I'm seeing doji, bulls and bears battling it out, there's a lot of selling and buying pressure, and it looks just like this. And definitely never trade on just a doji candle. There are people that will do that, and it just feels like it's unnecessary risk. Never should you really enter a trade and not feel like you can't wait for one more candle. These do often let me know to come back and check something. So if I'm watching a 1 hour chart and there's a 1 hour doji printed, okay, cool. I'll check it back in an hour, and we'll just pick up there. But with that said, it's just those three types. So we have our doji, we have our engulfing, and we have our hammers. We'll go look at some charts.